an occasion of celebration and recognition, and also to increase our knowledge, as we have great minds, great theories and great ideas to be shared today on this platform. My name is Gitesh Singh, and it's my extreme honor and pleasure being the MC for today. Ladies and gentlemen, I would like to welcome all our dignitaries on today's award presentation ceremony, as well as the panel discussion. Our panelists include extremely technical and learned speakers. I would like to welcome our panelists for today's special technical session on bird's eye view for an investor, excellence in financial reporting and initiative. Let's put our hands together and welcome Lieutenant Colonel Tushar Anand, GM IEPF. We would also like to welcome CA Sandeep Shahji. I would also like to welcome on stage CA Virendra Khalraji. In our panel, we also have CA Himanshu Krishnawalaji. And we would also like to welcome CA Dr. Atul Mohanji. I would also like to welcome Amit Agarwal sir to please join us on stage for the welcome address.
Thank you, Gitesh. To start with this technical session, let me take this opportunity to give an opening remark. We have the presence of Honorable GM IEPFA Authority, Mr. Lieutenant Colonel Tushar Anand sir, very learned Sandeep Shah sir, who is instrumental in Excellence in Financial Reporting Award since long. Tushar sir, let me share with you, this award is constituted way back in 1958. Since then, committee is conducting this award every year. And I think Shah Saab is one of the pillar of this award. He is a sealed panel member continuously for a decade. And I think he is grew for many technical reviewers and many professionals. We have the presence of Himanshu sir, Atul Mohan sir, Kalda sir. These are the sealed panel members of this award, and they have contributed a lot. Let me give you a brief of this award. Sir, annually we invite application from the corporate for Excellence in Financial Reporting Award. Then a 3-tier of scrutiny conducted by institute. It's a blind review kind of thing. No office involvement is there. First, technical reviewers, experts of that domain, do some certain marking. Then our sealed panel members have deliberation, various rounds of meeting, and sometimes this meeting goes for 2 days, 3 days, 4 days also. Then certain recommendation goes to jury, and then jury finalize the award. And today is the day when this award would be announced in front of august presence of many corporates. So before that, to share the best practices and shortcomings, it would be shared by the honorable sealed panel members here, that what are the shortcomings and what are the good things in financial reporting, and why it is apt to have IEPF authority at this platform. Sir, IEPF authority is the authority who takes care of the investors protection work, and financial reporting, ultimately reporting is for the investor. One of the stakeholder of the reporting is the investor, and a better reporting always helps the investor to take an informed decision. So I think it is appropriate to have IEPF authority, the only regulator or only agency, government body who take care of this interest of investors directly. So not taking much time, I take opportunity to welcome all the dignitaries on the dais. We have the presence of Honorable CA Mukesh Goyalji, the co-opted member of the committee with us. We have AGM of IEPF Authority, Sumit Agrawalji, Najma ma'am, media advisor for IEPF Authority, and our past chairman of Noida branch, Singhal Saab, and many others. Please forgive me if I couldn't name all the dignitaries available. So With these words, I really very thankful for these dignitaries who has spared their valuable times for this technical session. Over to Gitesh.
And ladies and gentlemen, we would like to now request Mukesh sir to please join us on stage to welcome our dignitaries with flower bouquets. Let's welcome Mukesh ji also with a big round of applause. Mukesh sir, please join us. We'll request you to please present flowers to Lieutenant Colonel Tushar Anand, and let's welcome him for taking out time and joining us for this technical session. Let's put our hands together. Now I request sir to please welcome CA Praveen Singhal sir. Let's welcome him on stage. Welcome Praveen sir. We'll request you to please present flowers to our dignitaries and welcome them for the panel. Let's keep on applauding, ladies and gentlemen. जोरदार तालियां आप सबकी बजती रहें. Now Dr. Amit Agarwal will welcome our dignitaries with flowers. We are extremely honored by the presence of our panelists who have joined us today. And now I would request Lieutenant Colonel Tushar Anand, GM IEPF, to please join us on the dais for his address for the gathering. Welcome, sir.
A very good evening to ladies and gentlemen. I hope everyone is safe and healthy in these challenging times. A very warm welcome to all the dignitaries on the dais. I'm Colonel Tushar Anand. I'm the General Manager, IEPFA. And at the very outset, I would like to congratulate ICAI for conducting this webcast on bird's eye view for an investor, an excellent in financial reporting. To impart knowledge on the needs of the analysis of financial health of an organization, both the making informed decision for an investor is very, very important. I am delighted to join this informed session, and I am confident that this webcast will be a great success. So Investor Education Protection Fund Authority, which is under Ministry of Corporate Affairs, and I am delighted to join you all as a representative of IEPFA under Ministry of Corporate Affairs. Now, IEPFA is not a very old organization. It is the only statutory body which has got a legislative mandate under the Companies Act to spread financial literacy pan-India in various segments of the society. So we have got a segmented approach, and for the same we have got partner institute, ICAI, and since inception of IEPFA, ICAI and IEPFA have joined hand together. So Dr. Amit has been a very dynamic leader, and we jointly, both of us, have been working towards segmented approach, and we have done various programs, investor awareness programs, whether it is at village level. In fact, at the village level also, we have got 3 segments of women folks, men folk, and the youngsters, because 65% of India is youth, and 80 crore of population are in the villages. And as per the latest survey, it says that 27% of India is financially literate. So 73% is the gap which we have to bridge, so that we can get people into the mainstream, they can make informed decision, and as a representative and the citizens of the country, they can be part participate in the growth of the country and the economy of the country. Now, for this particular reason, it's very, very important that as an informed investor, you should know about various attributes related to companies, how they were working, what are the books speaking about. It's very important topic what we are discussing today. We have got eminent personalities from the domain, and I'm sure they will be covering the topic extensively. At IEPFA, we also have an in-house deliberation, and we have got domain specialists with us. We find new ways and means so that we can reach out to various segments of the society, whether it is the cooperative society, the women, or the tribal areas, or for that matter, the village level, tier 2 cities, urban level. So every segment has got different needs and requirements. Depending on the needs and requirement, we are making programs, and as I said, Dr. Amit has been the torchbearer for all the investor awareness program pan-India, and jointly we are working together so that we can spread this awareness. So IEPFA as a mandate, we have got the financial literacy awareness, that is one. Second is claim settlement under section 124, 125 and 124. So that mandate also, I'm pleased to inform you all that we have been extensively working on that approach, and in fact last month itself we have done maybe more than 3,000 plus disposals and around 70 lakh plus of dividends which have been given to the rightful owners. So it's been an endeavor always that we want to ensure that the rightful claimant gets the claims back to them in the record time. At the same time, we are also mandated under the Companies Act to spread financial literacy, financial awareness, and safeguard the citizens of the country from the Ponzi schemes or the various schemes which are being run within the countries by people. So we have a portal where we come to know about what kind of Ponzi schemes are being run. And once we get the information, we try and take the corrective actions appropriately. So it is very important that financial literacy, financial inclusion, for that purpose, the investors have to be informed, and the books of the companies have to be understood by each one of us, so that if I want to invest into the market, I should know where do I invest, whether whatever the company is coming out with, whatever claims they are claiming, is it correct or not. So keeping that into consideration, I feel that this topic is very apt, and I'm sure we will get a lot of insight into the topic as the session goes on. And now I'll request the first speaker of the day to please give us the insight on the topic. Thank you so much.
Good afternoon, and thank you, Tusharji. When I see Lieutenant Colonel Tusharji, I feel that the health of all financial statements should be as fit as we see the session chairman. And I think the Government of India, Ministry of Corporate Affairs could not have found more befitting individual to handle one of the most important aspect on the Investor Education Protection Fund and its financial literacy. So, sir, I'm going to change what was supposed to be my last of the topic of conversation. I will take it first to give it little more relevance as to why the financial statements, gain importance. As we know that the financial statements are, apart from shareholders and management and the stakeholders, the lenders, is also extensively used by the analysts, by the university research professionals, and by academicians. And therefore, the whole purpose of the financial statements is to be able to, in an industry for a comparable scale, is to understand that how each of those companies are performing with reference to what they have disclosed, right? Each of the companies have obviously a different strength and weaknesses. And in this exercise of excellence in financial reporting, one fact which does not overpower the thinking of the technical reviewers to that of the Shield panel members and eventually of the jury is to look at that whether is the stock market performance a barometer for excellence in financial reporting, because these two are devoid of each other. What is important for the August gathering here and those who are listening online is to look at that there are framework which is prescribed under the Companies Act, which is our Schedule 3, which is the format for disclosure, and then you have the accounting standards which basically prescribes the recognition, measurement and disclosure. Obviously the recognition and measurements are accounting related matters, but what we get to see and read and compare is with reference to the disclosure standards, sir. And in India, we have this standard also called Standard on Agriculture, and that was the topic which I thought I would like to, from the financial analyst perspective, I would like to say. So we have companies or multiple companies which operates in the agriculture section, and we have Ind AS 41, which is the standard on the agriculture. Now, as we know that the agricultural standard, you have the produce, which is the fruit bearing, or like your coffee or tea or rubber. So you have the bearer plants, you have the produce on the bearer plants, and you have the produce which you harvest. Now there is one of the requirements, sir, is that when you harvest the produce, it is done at the fair market value, less cost to sell. Now, you have matured assets, you have immature assets, because the life cycle can be that, from the time you plant to the time you harvest, it can be 6 or 7 years in some cases, maybe 10 years in some cases. And the standard today gives you an option, or rather it encourages the preparers to give disclosure on the matured and immature assets so that you are able to understand and assess how the cash flows of those bearer plants will happen. Now, when we're looking at excellence, a company may choose to not give this disclosure, perfectly all right. But if we are to look at from a reader's perspective, who's today not in management, and they want to understand that what is your investment and what are your characteristics of the asset, the companies which have taken the disclosure on mature and immature assets will be on a higher pedestal as opposed to a company which decides to do a bare minimum disclosure. So this is one aspect of the Shield panel who's trying to look for excellence. It is so we are not rewarding compliance, sir. What we're trying to reward is the excellence. While, there may be two thoughts that if I disclose more, I have greater competition, but let the best man win, sir. I guess, the companies will have to, fight it out on its own. So I thought, from the aspect of relevance of the standard and the choices which they are giving you, how do you make use of it? Going further, again, we are trying to connect the dots, Chairman, sir. So today again in an agricultural standard, when the produce is valued at fair value, and when you come to the disclosure on the accounting policy on inventory, you may come back and say it is valued at cost. Now, there's a difference between cost as opposed to fair value, because fair value and cost need not be the same in case of an agricultural produce. So if the slip of tongue or slip of words, while your accounting may be right, but if your disclosure is wrong, you don't pass. So that's the another aspect of care which we take. Some of the other matters which I have maybe 10 minutes before my other learned speakers take, so I'll try and cover up maybe 6-7 different points, not necessarily by standard, but by heads of topic, just for the August audience to appreciate that how is the assessment done in the respective categories. There are almost 15 categories over which different Shield panel members are allocated. So this is one disclosure is around the capital management, and as we know that we are all talking about under the Ind AS framework. Now, in a capital management, it is basically how the company manages its equity and its liability management is a section in AS 1, which is a disclosure. Now, we see in some of the companies which is regulated, let's say by Reserve Bank of India, it's a regulated entity. You are expected to give disclosure, but elsewhere you are giving your capital ratios or the ratios as far as the net owned funds requirement of the RBI is concerned. But when it comes to the capital management, some innocuous line slips in to say that the company is not regulated and therefore there is no regulatory capital. Now, this is in contrast to the industry and the framework under which you operate, as opposed to what you give under the Ind AS framework. So that's another area. There are companies which have chosen not to give any disclosure, so obviously those are the ones which gets negative marks. And many a times we find that they give only broad qualitative principles without giving the quantitative details. The standard requirement is also to give quantitative details. So every missing description, it does not mean that your financial numbers are wrong, but from the disclosure standard, it definitely does not match the compliance. Another instance is that for all those who are familiar with the financial instruments, right? So today when you account for the interest, you can have or the financial instruments, it can be under an amortized cost, or it can be through fair value through profit loss account, or it can be through fair value through OCI. Now, an amortized cost in let's say for an NBFC company whose business is to lend money, is essentially, if you are the principle would mean that you will hold the asset more or less to its maturity, because the whole objective is to collect for interest and principal. But that does not mean that you cannot sell. But assuming that a company, sir, which follows an amortized cost, because amortized cost is basically not taking up the fair value of your portfolio on an annual basis, and there is a regular securitization, which means you are selling your portfolio of lending to another special purpose vehicle, and you still follow an amortized policy, and you choose not to disclose as to what were the conditions under which you had to regularly securitize. The requirement of the standard is to give that insight. Maybe there is a deterioration in the lending portfolio. So that could also, it does not mean that only because you have made a choice to do an amortized cost, you must necessarily have a loss. You could probably sell off earlier than time. But having taken that as a policy decision, the flip side of it is when you have securitization, you have to also give disclosure of what were the conditions which necessitated disposal of that. So, the financial statements, when a reader is looking and who's an expert in understanding the financial statements, will look at the policy choice, will look at the disclosure, and then they will come back and say that yes, it is a correct policy choice with correct disclosure. Again, moving forward, we have again the requirements of disclosure of the assets and liabilities by bucketing 0 to 30, 60, 90, 120. So basically to understand whether is there a asset liability mismatch between the resources we have versus the liabilities in a bucketed scenario. Now, as far as the assets are concerned, you can obviously have an expectation that whether is there going to be a likely delay, and therefore you can shift your otherwise a scheduled recovery to maybe a later recovery. But when it comes to liability, you cannot shift the bucket from 30 days due to 60 days on the anticipation that I'll be able to manage the lenders and convince them. Because the liability maturity date is committed, unless on the reporting date you've got the necessary readjustment, you cannot shift the bucket on an estimation basis. So, while you are still disclosing the all liabilities, but your disclosure on asset liability is not correct. So that's another area also which we look for. There is a concept again under the Ind AS framework is where you have an asset which currently may be under your operating asset, but which eventually will be held either to earn rental income or eventually to have the appreciation, because now you no longer require it as a part of your operating assets or from a plant, property and equipment. And the standard Ind AS 40, which deals with the investment property, because those are carried at cost and only the fair value disclosure as an additional information is given. But one of the condition, and again, while the company may have not done a wrong recognition, but when it came to the accounting policy on shift from property, plant and equipment to investment property, the policy said that the transfer is happening at a fair value. Now it is at a cost or lower, but not cost or higher. You cannot shifting from one pocket to second pocket, you cannot recognize the gain. But if there is a lower value, then obviously there's an impairment and you will take it at lower value. So why is some of these things happening? I think many a times it's just that the level of attention which we expect the preparers and everybody in this course to look at, many a times this is taken as maybe innocuous, maybe not harming, but from all the purest eyes it does not pass the test. Take an example further down. We have, sir, you can buy a business which is under the business combination, or you can buy only an assets which is not a business by itself. So these are, because both the standards for pure asset acquisition is accounted under the Ind AS 16 and the business combination is under 103. Now, in many cases, when they use the, and Chairman sir, you would, in your tight, I would say training, there is no scope for error, right sir? So I think, the same thing happens, that if you have done an asset purchase and if you use the words that you have done a business combination and you do not do the disclosure of a business combination, we do not know whether is it really a business combination or is it an asset purchase. So again, that's another area. Sir, again talking from your the risk perspective. So this is a classic example, sir. We have a disclosure under the Ind AS framework on the various risk management policies, and so that can be for interest rates, that can be for foreign currency, that can be for business risk, that can be climate, that can be for geopolitical, whatever may be the different risks which applies to that industry. And this is a classic example where you have a company whose more than 75-80% of the revenue is generated from a single distributor outside India. Now, barring to say that there is only a distribution arrangement and therefore the continuity, it is impossible for any analyst or any reader to make sense as to how does a company whose 75% of revenue is in the hands of a single distributor that side outside India, which is not part of your group company, how do you, with two lines, how does a company expect to say that we have done justice to the requirement of the risk management practices? There would have to be little greater information around the risk management practices, that yes, whether do you have a long-term commitment, if the distributor fails to perform, what happens, if the distributor shuts shop, what is the alternative business plan, what are the risk management, that's the whole reason why it is called risk management policy. Now, if in the risk management policy, if we find deficiency in respect of such manner in which the businesses are conducted, while management may be right in its, it may be doing anything and everything which is needed, but finally for us what is available is those pages of annual report, and from that annual report is what we have to decipher. Again, sir, another point which I think, again from the risk management perspective. So we have this credit rating of the instruments, sir, right? Now there are obviously 4 or 5 different credit rating agencies which are approved by SEBI, and you have periodical credit rating of instruments, and you may be the same credit rating, it may go a notch up or it can go a notch down. Now, one of the requirements also, because in our this excellence, what we look for is also the disclosure under the quarterly results, which is mandated under the LODR. Now, our source is between annual report and our source is between the quarterly results. I mean, that's because we have no other fishing inquiries to be done, so we have to do based upon what is available between the papers in front of us. Now, this was a case where the company in its annual report somewhere say that the credit rating during the year was reviewed and there was a lower grading on account of the industry and the, because of pandemic, there was a kind of a situation. Now, this happened during the Q2. The date was prior to the announcement of the Q2 results. Now, the requirement of SEBI under Regulation 52(2) is also to give any change, whether up or down, in terms of the credit rating. And when it came to the annual report, they were giving only year-to-year position. Again, sir, nothing wrong. Quarterly, incorrect. Annual, correct, because it is expected that what was the comparative rating as of March 21 and what was the credit rating for March 21. But from the financial excellence perspective, it would have been prudent for the companies to disclose the change from the beginning to the in between, and then what was the position at the year end, and explain, and thereafter explain whatever were the conditions for change. Another aspect which I may want to just highlight is that many a times the cash flows are, a lot of people believe that it is one more piece of disclosure, but I must say that it is not. The cash flows are looked upon very, very minutely. Everybody wants to understand that what has been the cash flows from investment, from operations and from finance, and there are requirements as to where can you give a net and where have you got to give gross. So what we have observed in many cases, like when you borrow, and if you are not a banking, working capital, which is not like your cash credits or overdraft facilities, you cannot net off the position between what you have borrowed through the year and what you have repaid during the year. Both of them would have to be given at a gross level, because both of them have relevance as to how much have you taken and how much have you repaid. If you only give net, which means I may have borrowed 1 crore of rupees, I may have paid off 99 lakhs and I only give you 1 lakh, nobody will know what has been the stress on financials during the course of the year. So again, what we are looking for is that the disclosure standards have an intent, there is a use, and there is an explanation which the analyst or the users are going to look for. And therefore, for us, the tough choice is that where do you let go, where do you not let go, what stringency to apply, where is the gap between mere compliance and where is the excellence. I may want to therefore, end at the last of my topic in terms of a situation where we have on the trade receivables, sir, we have what we call is the expected credit loss model, which means that what is the likely default which you expect as the money will get collected. And you can have some unbilled revenue, because by the time because there is a contractual arrangement where you cannot bill unless that milestone has been received. Or sometimes, sir, it is possible that you may have 5 crores of minimum work done before you can bill, so while other work has been done. Now, this was again, where we look at the gap between what you write and what gets disclosed. So, this was a policy where unbilled revenue was there. It said that there is an ECL done on the unbilled revenue, but unbilled revenue is disclosed separately and trade receivable is disclosed separately. While they may have done the ECL and it may be part of the trade receivable, but there was no disclosure of ECL on the unbilled revenue. So what happens is that again there is no benefit of doubt which we can give, because if there was an ECL, then there would have to be a disclosure under the unbilled revenue, because nobody, even there was a big world over this question was being asked, Chairman sir, is that whether the receivable from a bank, can there be even an expected credit loss? I mean, there was a thinking that yes, it's a government. If it was government sovereign bond, then it's a label at the government security. But otherwise, there is always a risk of failure. I have, there is a lot of, but I have learned colleagues after me as well. So with this, I would conclude my part of the session, and I thank ICAI and the committee members for giving us this opportunity to closely work with the various colleagues and with the technical reviewers and interact with the the jury on the panel, and but for the applications by the various companies, this session would not have been possible. So we also extend our compliments to all the companies who have applied for this process, irrespective of whether they are a winner or they are not a winner. But that's how the technical excellence will always come up. Thank you so much.
Right, good evening to all of you. The chairman, my other members of the Shield panel, all other seniors and all representatives of the companies who applied for this award, who are all present here. Sandeep set the tone by laying down what is the expectation of the Shield panel when we go through the financial statements and other details which are submitted by the companies. And to add to what he has said, I'm going to maybe take you something on a standard level rather than topic wise, because what we believe is that on few of the standards, the compliances need to be improved a lot by almost all the companies which we really came across. And one of the standards on that obviously would be this Ind AS 109, which is on financial instruments. And let me tell you, this is one of the most difficult standards, not only in India, but across the world. In fact, when the standard first came up as IFRS 9, the then chairman of IASB, Sir David Tweedy, had said that if someone says, I know IFRS 9, it means he has not read the standard. Now, that's the level of complexity which is there in the standard, and since the standard is very long, it is complemented by two other standards, which is Ind AS 107 and Ind AS 32. So there are definitions, there are disclosures which are there in the other two standards, but on 109, we find several inconsistencies in the disclosures and even in the recognition and measurement. And some of them are, maybe first is on this financial guarantees. Now, in the corporate sector, if you have got multiple entities, holding companies, subsidiaries, obviously guarantees are given, letters of comfort are given. Now, Ind AS 109 does deal with these guarantees, does tell you how do you do a fair value of the guarantees. If that is not to be done, then there is a provision in Ind AS 104 on insurance contracts, whether it's an insurance contract in that sense. But in very few companies, we find that this is really treated the way it should be treated in that sense. A lot of people just treat it like a commitment which is there without getting into the nitty-gritties of 109 fair value of financial guarantees which are there as such. when I look at some other items of 109, you also have this ECL, which is also covered by Sandeep, but ECL, the real policy on ECL, which has to be extra, also correlated with your risk policy, is not really coming out in a lot of financial statements which are there. And 109 therefore is something which we really look upon, and we have also found that in some cases where the company has got joint ventures, subsidiaries, they clearly say that 109 is not applicable. Now that is not correct, because though the company may go for valuing that at cost, 109 still applies as far as the impairment provisions and other things are concerned. So I think companies, if they look at 109 and they try to comply that more in whatever is there in 109, it would be, achieving a lot of things when they want to get to that excellence or something which is there. 109 is not just about measurement and recognition. There are multiple disclosures which read with the other things in a financial report can add a lot of value and can really lead to excellence for a company or an entity as such. The other thing which we find that is lacking in a lot of financial statements is on Ind AS 115, which is on revenue. Now the revenue standard is a recent standard, just maybe 3 years old, which is there, and it is again a combination of several standards which were there in the past. Now this standard on revenue covers your sales, it covers services, it covers contracts, it covers even real estate developers, it covers maybe infrastructure projects. So 115 again is a big standard which really needs to be complied, both recognition, disclosure, measurement, everything by various entities which are there. And that is again sometimes we find it lacking. And so, for instance, there is no component breakup of the revenues which are there. If there are different streams of revenues, that is not really given by a lot of companies. Now, this is what sometimes we look for, that is the entire disclosure which is given under 115 there in the financial statements readily available at one place. In both the standard 9 and 115, there are also some disclosures which may be not mandatory but voluntary. Now, these are disclosures which are encouraged. Now, if a company gives those disclosures which are encouraged, obviously it is moving towards excellence in this when we are looking at those particular financial statements per se. The third is 116. The new standard on leases. And again, I can quote Sir David Tweedy here. He had said that when I fly on an airplane, I wish the plane I am flying on is on the balance sheet of the airline company. And that really happened when 116 was implemented, where all the leased assets came onto the books of the company along with the corresponding liability which is there. Now again here, a lot of inconsistency happens sometimes when you have got a long lease of a land or some building or some asset which is there vis-a-vis short-term leases, the disclosure of the various liabilities which are there. So again, a lot of things which need to be really looked into by a lot of companies for getting into that excellence which is there. And I would just lastly like to cover one more thing, and that is the very basic thing on disclosure of accounting policies. Now we find that you have the very first standard, which is Ind AS 1, which talks of accounting policies. A lot of companies miss out disclosure on very important policies which are really mandated by the standards which are there. And we find that lot of companies, including the best of the companies, having the best of the maybe the auditors also, they miss out on writing a policy on how do they prepare a cash flow statement. They miss out on writing how do they define cash and cash equivalents. They miss out on a dividend policy as to how do they account for dividend in a company. Sometimes they miss out on writing a policy on segments by a company. Though they may give disclosure in the notes about what are the segments and all, they don't write that as an accounting policy per se. In a lot of companies, we have found that the operating cycle is not defined, though it is part of Schedule 3 also, we find that in a lot of thing about these grants and government subsidies. What we have also seen is that a company may have multiple streams of income. So sale of goods, sale of services, you may have interest, you may have something like export incentives which you have got, you may have even got maybe incomes from insurance claims. Now on each of these items which are important, you need to have some accounting policy which is there, and we sometimes find that you only have an accounting policy on sale of goods and services. You don't have a policy on accounting for interest received or dividend or maybe insurance claims or such other things. So I think I would like to just stop at this only 4 main standards which I think all of you should really concentrate on. I am not saying that compliance is not done, but to get to excellence, you need to go just beyond the basic compliance of these 4 standards, 109, 115, 116, and the very first standard which is Ind AS 1. So I would not like to take a lot of time and get into each and every small thing which we get into, but suffice that broadly, if these things are done, I think we may have next year more people who get into this list of awards which are there. So thank you.
Good evening, Chairman Colonel Anandji and my fellow panelists. There are 2 things on the board. One, of course, is excellence in financial reporting, and then there is bird's eye view for an investor. And we already have a feel of the technical compliances, and that is the bare minimum that we expect any participating company to reach, because my fellow speakers have outlined some of the technical standards. I'll just focus on the bank, so that because right now we have the investor's perspective also in mind. So what does this excellence and that investor perspective have in common, and what is that which makes this excellence relevant from the investor's perspective? Pure compliance, does it lead to excellence? That, I believe, is the greatest contribution that the institute, by introducing these kind of awards. So excellence would mean that you may move beyond pure compliance. So when we evaluate, the pure compliance is just taken as an entry point. But what would be the excellence part of it? Excellence would be that you want to reach out. You really want to communicate. What are financial statements? Financial statements are not just what is called the boiler plate commitment or something. It's not just compliance. There has to be a softness in that thing. And then you have to have a feel. And it's not just the financial statement. There's chairman's statement, there's director's report and all that. And if you focus on that, after a while, you can get to the subtle part of it. You can really feel that those who are behind that thing want to communicate. And that is what is important from the investor's perspective. So in these excellence awards, the evaluation process has ensured that the compliances in any case are there. That by itself is not an easy thing. But thereafter, for instance, one thing that now we have been looking into is the look and feel. So if I give you 4 or 5, see, that is the kind of a complexity we face. Like if I am doing a bank, I have 10 reports. I have to select. And frankly, banking has a lot of compliances to be made. The standards are there, then there are RBI prescriptions are there, and then there are legal prescriptions. Now, because of the competition built in by the institute, private banks in particular are already standards wise, they have reached a particular level. So how do you get into the excellence part? So then you have to impute these subtle things. Like you open up the annual report and go through that thing. Do you feel like reading it? The presentation, things of those kind of coming in. So I'm very happy to note that because of this initiative taken by the institute, from the investor's perspective, we are making annual reports or these financial statements all the more relevant. All the more, maybe it would be a typical word that I'll be using, making it all the more interesting. So I'll close with this, but just to give you a perspective that this excellence in any case ensures the technical standards, but is taking the presentations beyond that thing. And that is when we feel some kind of excellence has set in. Thank you.
A very good evening to everyone here. I think my very, very learned colleagues on this dais have already covered most of the technical points, and I'm very relieved about it, actually, because here are the gentlemen who actually know the technical stuff of it. But I'd like to share from my side some more perspectives to this award, what we are trying to give here from the Institute side. I think the technicals have always been important. As far as the committee is concerned or the Shield panel is concerned, we've always been looking at the technicals as the core area of evaluating an entry. But I think besides that, there are a lot of other things which we would like to share to you and tell you as to what we are looking at. So we go through a lot of other things which are there in the annual report, like the chairman's speech. What is the chairman trying to say about the company? What is the vision of the company? Whether the chairman has a vision for the company, whether there's a mission which is stated, how they are achieving that vision. Something very relevant for today's time, how the company has coped up in the pandemic times. How's the dent to the business, whether the business has suffered because of pandemic, whether there's a dent and that dent has been actually reflected and captured in the financial statements. If the performance of the company has gone down because of COVID, then whether that has been adequately reflected and whether adequate provisionings and other impairments have been taken into account in the balance sheets. This is something which is very important and has been one of the very criteria for rejecting certain applications in this year, where we have seen that people have not come forward and come clean and how the business has been impacted in this year. Beyond that, if you look at it, there are many other requirements as far as the company has to fulfill, when it has to present its accounts. It has to do the SEBI disclosures. We are talking about the SEBI regulations, right? Now we know about corporate governance, whether the company is following the corporate governance norms, whether the disclosures in the annual reports for the corporate governance are up to the mark. How is the level of corporate governance in the company? These are also factors which we do consider in terms of, finally taking a decision whether a company has, put in the best effort in terms of presenting what it is doing. If you're looking at the annual statements, then the annual statements have to be readable. Let's talk about a lay perspective here, sir. When I'm talking about a lay perspective, not everybody is technical. At the end of the day, one has to see whether the annual statement is readable. Is it readable in a format which is, friendly for an investor? Whether the graphs, the tables, the charts, the data, the trends, the ratios, whether they have been all reflected very adequately or not. So whether these ratios tell a story about the company, how it performed over the last 10 years, 5 years. So a lot of these things which actually go into looking into a final judgment when we take a final judgment on it. My colleagues have pointed out a lot of technical issues. As a student of this course, when I used to appear for my exams, I would always take accounting standards as a very heavy stuff. I would say, yeah, who's going to read and, appear for the exams and talk about accounting standards? But believe me, accounting standard today is so important in terms of bringing out the substance over the form. The idea is to bring the substance over the form. So, a company can do a lot of jugglery in terms of presenting its account, or somebody would like to make a rosy picture. But it is where the accounting standards come in terms of the Ind AS, and it really, makes an effort at whether the form has not been overshadowed, the substance has not been overshadowed by the form. So this is where, our team has done a very elaborate exercise. I think we've been sitting for months trying to go through the accounting standards and see. Few areas which are very, very important today, which I also, would probably like to point out is intangible assets. When you're looking at intangible assets, this is one area which is an upcoming area. A lot of assets today are intangible today. The valuation of intangible assets is increasing in the company's balance sheets over the years. So whether the impairment, the subsequent measurement of the intangible assets has been properly recorded in the accounts is something which becomes very important to judge the worth of a company. And we found some issues here where we have taken into consideration while, deciding the awards here. So, if you look at all these areas, I would not really like to get into the technical side of it because most of it has already been covered. I think cash flow statements, I think Sandeep ji is covered. It's very, very important, the cash flow statements. The way, the reconciliation of the cash flow statements, whether the gross and netting of the cash flow statements has been done properly or not. All these have been covered here. I think most important for us is, to see whether the assets, as I said, the tangible assets and the intangible assets, there are a lot of issues in terms of subsequent measurements of the assets, the fair valuations, the movement in capital work in progress. We could see that there's a lot of movement in capital work in progress, which has not been, fully captured in the statements. We talk about normal standards, normal assets, they have been reflected, but a lot of money goes into the WIP, which is the capital work in progress. Whether that has been captured is also been, has been taken into factor while, working on the awards here. So, if I look at the entire scenario, our team has gone into every factor possible while arriving at a judgment. And if you look at the awards, I think everybody's worked hard. We can't point out any errors from anybody's side saying that, that nobody's made an effort. I think there are wonderful examples which have been set. Some of them have exceeded the expectations. And I think this is where we talk about excellence. Some companies have gone beyond the normal reporting requirements. They've done something which is a little higher. It's just set a benchmark for the market here. And this is exactly what the award is trying to recognize, that why not set a benchmark which is more than, something which the law mandates. I am supposed to do something which is going to set a benchmark in terms of doing something which others will follow. So I think the award is all about this. And my team finally, I think, has a list of companies who've done well. And all these areas where we have sort of given the ratings, they are fully documented. We have reasons as to why it has been done, where it has not been done, with all the details. It's a very objective exercise which has been done. My appreciation to all the companies who participated, because, whatever you've done here in terms of putting your entries has actually helped us to arrive at our judgment. So thank you, friends. Thank you so much.
And with this, can we have a louder round of applause, ladies and gentlemen, for all our panelists? And I would like to invite CA Anuj Goyalji, Chairman CCMIP, for the closing remarks for the panel discussion. Welcome, sir.
Thank you very much. I am really grateful to our SEAL panel members. I think the way they have contributed when they acted as SEAL panel member, before they were there to train our technical reviewers, and now as a guiding force, as a mentor, what are the commonly found errors and how we can improve the quality of our financial statements. So we are really grateful to Mr. Saha, Himanshu ji, Atul Mohan ji, Virendra Kalra ji, and of course our chairman of the session, Lieutenant Colonel Tushar Anand ji. May I request all of you to put your hands together for all of them. Friends, as chairman of the research committee last year, I took over, and it was a tough time. The corona pandemic was there, and we tried to convert this threat into an opportunity by using the technology. For the first time, we are having the presence of our SEAL panel member, Ellen Agarwal ji also, C. Praveen Singhal ji, past chairman, Noida branch. Light is less, so I am not in a position to see each and everyone. Pradeep Gupta ji is there, other respected technical reviewers, SEAL panel members, and I think jury members are also there. So we tried our level best to see that how the research committee can really do something very concrete, not only for the profession, but also for the nation. As per the expectations of each and every citizen of the country, and APJ Abdul Kalam, when he was the president of the country, when he was addressing the gathering of chartered accountants, he told that the chartered accountants are partner in nation building. So at the research committee, we took this initiative to prove ourselves the real partner in nation building, and we come out with a research project scheme in 2020, and in this research project scheme, the last 2 years, around 20 research projects have been undertaken on those topics which are very important, not only for the profession but also for the nation. And we have given the research findings to the central government, to the state government, various government departments, so that the revenue can increase, the expenditures can be minimized, the leakages can be curbed, and this initiative has been appreciated by the regulators, by the central government, by the state government, like anything. Then to ensure that our young chartered accountants can really do something very concrete in the field of research, we introduced ICI Doctoral Scholarship Scheme. And in this ICI Doctoral Scholarship Scheme, the young researchers up to the age of 45 years, if they want to go for any research, they want to go for PhD on the topic, on the subject prescribed by identified by the research committee, and on full-time basis, if they are going to take do the research, either sitting at ICI office or at any university, then 50,000 rupees per month for 3 years we are paying the honorarium to them, so that, and the propriety of that research will be of the Institute of Chartered Accountants of India. And one very important initiative which we have taken for the first time in the history of the accounting profession, Institute of Chartered Accountants of India, through its research committee, has come out with the ICI International Research Awards, in which each and every member country of IEPFA participated. Last year more than 100 papers were there, and this year more than 160 papers were there from each and every part of the world. IEPFA president of International Federation of Accountants, was the chairman of the jury last year also, this year also, for the ICI International Research Award. And through this initiative, we have established that Institute of Chartered Accountants of India is the leader as far as the research is concerned, in the international leader. So I am really grateful to all our honorable members for their great support, our dignitaries present here, our seat members, as we are of course running out of time. So I will not be taking much of your time. We are eagerly waiting to start of our award function. I will request all of you to please stay with all of us. I congratulate all the participants. Of course, I will congratulate them when the award function will start. And I will say the record number of entries we have received for the ICI Awards for Excellence in Financial Reporting. 5 days training program was undertaken for the first time to train our technical reviewers, so that the quality of technical review can be enhanced. I am really grateful to Mr. Saha, Himanshu ji, and all other honorable members present here, the SEAL panel members, Virendra Kalra ji, Dr. Atul Menon ji, and of course Lieutenant Colonel Tushar Anand ji, for their great contribution for the cause of the profession, for the endeavors of the research committee. And I am really grateful to all our honorable dignitaries and delegates present here, and the awardees present here. I think the way you all have come forward for the endeavors of the research committee, I think it is something great. I am really grateful to Dr. Amit Agarwal ji, the secretary of the committee, and his entire team for working day and night in this time of pandemic also since last 2 years. So thank you very much. I will request all of you to join us for the high tea, and before 6 we will of course start our award function. Dr. Jitendra Prasad, our honorable minister, will be the chief guest. Our honorable president ICI, vice president ICI, and all other central council members will be amongst all of us. Yeah, and of course, when our dignitaries are here, we are will be very happy to present them a memento. So may I request Master of Ceremony for the further proceedings. Thank you very much, friends.
Thank you so much, Anuj sir. Ladies and gentlemen, we would like to thank our panelists for joining us. As a token of our gratitude for all our expert panelists, we would like to present the mementos. I'll request Anuj sir to please present a memento to Lieutenant Colonel Tushar Anand for joining us. Ladies and gentlemen, a huge round of applause once again for Lieutenant Colonel Tushar Anand. We would also like to show our gratitude for CA Sandeep Shah sir. I'll request Anuj sir to please present a token of gratitude for our expert panelists for the technical session that we have just attended. I would like to present our token of thanks to C. Himanshu Krishnadwala ji. We would also like to thank C. Dr. Atul Mohan ji for joining us. A big round of applause, ladies and gentlemen, for our expert panelists. We'll request Ellen Agarwal sir to please join us on stage for presenting memento to our panelists. And with this, ladies and gentlemen, we conclude our technical session. After the high tea, we will be back with the presentation ceremony for the awards. So please join us for the high tea. Thank you so much, everyone. Thank you so much to all our panelists once again.
And I welcome CA Pavan Goyal ji, our honorable jury member. And I will request him to please come on the stage. We will have a group photograph with our honorable technical session speakers and the chairman of the technical session. I will request Ellen Agarwal ji also to join us, please. Pradeep Gupta ji also.
Mukesh Goyal ji also requested to join.
And may I request Dr. Sushil Lalji, our jury member, to please join us on the...
The honorable jury members present here is kindly requested to join our stage for a good photograph.
All the jury members and the sealed panel members who are present here are requested to please join us on the stage. Naman Gupta ji is requested to please join us on the day.
Thank you so much, gentlemen. And now we request everybody to please join us for the high tea. And at 6 p.m. we'll commence the awards presentation ceremony. We'd request you all to be back and inside the ballroom and join us again at 6 p.m.